Okay, so this is the monthly budget worksheet that we're going to be using to prepare the budget for the upcoming months. So basically what we're going to do here, the first thing is we're going to write the period. So as we did here, we did the bank statements for April to May and for March to April. So our next month, the month that we haven't, lived yet per se, would be May to, go here, it'll be May to June. May to June. Okay. And in this budget sheet, we're going to have two columns. We're going to have budget and actual. Now, just to quickly go over the differences between those, the budget is what you're going to do at the beginning of the month. So for this period, we would do this in May. Once we get all our information from the bank and the credit card statements, we're going to go ahead and put the budget amounts, what we're looking to spend or what we're looking to make based on the averages that we got. And then the actual cost is what we'll do at the end of the statement cycle, which we will actually go transaction by transaction, which we would use the summary reports for that specific month. Okay. So let's start off with salary. This is going to be 1,500, and this number is from the bank statement on the averages. Okay. So just to make it simple, when you're doing the budget, it's going to be at the beginning of the month, and it's going to be from the averages table, what you expect to make and what you expect to spend. And then on the actual cost is going to be from the actual summaries table, and it's going to be from the prior month. We're not going to use any other months. Like from this point onward, you're only going to use 1 month. You only need to record the transactions for 1 month, and you just compare the every monthly budget to the previous one. Okay, so for secondary source of income, we're going to put 0 here because we don't have any other income coming in. Right? And now rent / mortgage. So you're paying for where you're staying. We have that here for 550. So that's basically how much we're spending each month, roughly. Now for when we're doing this budget sheet, don't worry about negative numbers. Put all numbers as positives, okay? It's built to work off positive numbers. And we're just going to keep going down. So investment savings accounts. So this is anything that was transferred towards our savings accounts. So this would be this transfer 500. So again, we're averaging each month about 500 being transferred towards our other accounts, towards our separate accounts. Okay, and that's the same concept we use for rent. By using the averages, this is basically how much we're spending each month, and we're writing that down as our budget. Okay, so back here now, home insurance, flood insurance, car insurance, health, property tax. We're gonna skip a few of these. I'm assuming some of you guys don't have this if you rent out a space and you don't have to worry about some sort of flood insurance, or maybe you have your health insurance through your job, or maybe you don't pay for that at all. So I'm just gonna go over a few of the more likely ones. Okay, so you might have renter's insurance, okay, and you might have car insurance. Okay, so let's go ahead and explain this a little bit. The homeowner's insurance, and as for all of these, you don't pay these every month. So this wouldn't reflect on your bank statement unless you actually paid it that month, that particular month. So what we're going to do is you're going to see how much are you typically spending for your homeowner's insurance in total. So for example, let's say you pay your homeowner's insurance on July of every year and you pay 1,200. Obviously we don't have July here, so we're not going to see that transaction. But we want to kind of account for it just to make sure we have enough money saved up to make this payment when it does come. So in this scenario, we're saying that we pay an annual premium of 1,200. We take 1,200, we divide it by 12, so that's around $100 that we're not going to pay each month, but we should have in mind that we need to have $100 saved up each month to make this payment once it comes. All right, and then that's the same concept with the car insurance. However, most car insurance is probably every 6 months. So we'll put semi-annual here. Semi-annual payment of, let's go with 300. So the math behind this one is super simple. This was divided by 12 because we pay this every year, and a year has 12 months. This is paid every 6 months. So we're going to divide 300 by 6. Okay, and that'll get, every month we need to save $75. So at the end of 6 months, we can have 300 to make this payment. Okay, and we're going to leave the others blank. But if you have this as the same concept, you're going to put the annual, or if it's semi-annual, and then the amount divided by 12 or 6, depending on which type of payment you're making each year or each month. All right, so let's go down here to the next category, bills. That was annuals, by the way. We have it here. So annuals, bills, it's typically going to be your water, your electricity, your cable and internet, and your phone. I think those are pretty common. If you don't have these, you can either delete them or just leave it at 0. But I did fill all these in. So actually, no, I filled only these two in. The cable and internet and the $45 phone bill. Okay, and we're getting these from the bank statement as well. Okay, now these could be on your credit card statement. In this case, I'm paying, in this example, the phone bill is being paid through the bank. But let's say you're paying it through the credit card. You would go to the credit card, go to average, and you'd see where would you have the phone bill, the internet bill, the electric bill, and you would get it from here. In this case, it's coming from our bank. We see here we spend around, average around $45 each month for phone and $110 for internet. So that's where we got those two amounts. And then the last category is basically the expenses that we do on a day-to-day basis, pretty much every day, and we'll have the total each month. So we're taking this from our credit card statements, which basically should have most of your day-to-day transactions, but be sure you don't have, be sure to not have any here. We're gonna round up typically here, just so we can get some cushion or some leeway. So for food, from our previous 2 months, we averaged out about $60, so that's what we're gonna put, 60. For gas, we averaged out about 70, right? And we're just gonna keep going. So merchandise was 60, groceries was 32, and the 32, I'm getting that from supermarkets. Okay, then we have entertainment and subscriptions. So entertainment was 40 and subscriptions was 30. You can change these numbers. They don't have to be exactly from your average. So if you feel like you're gonna spend a little bit more money on let's say groceries because you're gonna throw a party maybe, you might want to increase this number for this month. And same goes for entertainment. If you know you're gonna go to a game, you know, you can go ahead and put the amount according, okay? And then unusual, you typically just want to put some amount here. You don't need to put anything too crazy. I mean, if you take the average from this month, it's around 280, which I don't think you'll have, you know, 280 each and every month, because then that would be more of a typical expense. So I would leave that blank, or if anything, put like $100, let's say. All right. And now you'll see here total expenses, the last portion of the budget. This is basically the adding up everything up till income. Basically, that's going to add up all your expenses, and that's going to be labeled right here. And then the net change is going to be your income, right? All your sources of income, and it's going to subtract it from the expenses. As you can see here, we have a negative 272. Keep in mind that that's only because we're not going to spend these amounts. We're going to have these listed here, although we're not going to spend them. We're accounting for them. So that's how most people get into that, is because they don't take into account these annual payments. So just because you didn't pay them doesn't mean you're not going to pay them in the future. So typically people would have this at 0, and let's say maybe they don't take into account unusual. And you can see we have a positive net change, right? You think you're doing all right, but in reality, you have to take into account that you need to save $100 each month for your home, and you need to save $75 for your car each month, okay? Now I'll give you the actual net change, and then you want to build off that. So some tips to building off the information that you gather on this workbook is basically just make sure you're spending less than what you're making. Try to always be making more money than what you're spending, and try to always also have some sort of saving or investment account where you're funneling money into for retirement. And also, when you're looking at expenses, just one quick recap, look for any expenses that you know that they're too high and you should cut back on. And take a look at subscriptions as well. That's one of those categories that a lot of people have multiple subscriptions that they might not even use anymore. And you can, see this in more detail with the credit card statement, and you can maybe cancel any memberships. Okay, so that's pretty much it for this entire workbook. Hopefully this could help you guys manage your finances better, and hopefully get you to a point where you're not losing money each month after accounting for every single item, as you should be. So hopefully this helps out. I'm going to have a link in the description to this full workbook. It's going to be completely blank. Like, there's not going to be any amounts, so you can just add the amounts. All the formulas will be there, and hopefully this could help you guys out.